Hey there, Vinny from Project Frugal. It's been a couple of weeks between drinks. It's time to get back into Denise's portfolio. Work has been extremely busy, hence no updates, but let's see what's happened anyway. And here we go straight into the portfolio, $71,579.58 to be exact. Not including, we're not actually going off this number because we're not including the warrants for Kingfish and also Marlin Global, and we haven't taken into account the fees when we put these $4,000 in every time we've got $4,000, and we're not including the Shareholders dividend payments that we get, or the interest payment should I say, but that's okay, it's close enough. And yeah, so there we go. So we've actually got $4,648.86, that's real money, in the Shareholders. We didn't invest last time, we could have invested $4,000. We will be doing it next week, that's for sure. What are we going to buy? Well, we'll have to find out. It's probably going to be Fonterra Shareholders Fund, but we'll run through the numbers, see if it stacks up, and yeah, you can be the judge for yourself. So that's what we've got. Let's go and have a look at what transactions have happened since the last time we put some money in. Moving into the wallet, so there's nothing in the wallet because everything gets transferred to the Shareholders, so we can earn a little bit of interest while that money's just sitting there collecting dust essentially. So there have been a number of dividends, and as you can see here, we've moved the money into the Shareholders here, $31.75, and that's because we've had a cash dividend for Somerset Group Holdings, $31.74, rounding, that's a rounding error, that 1 cent difference there. What else have we got there? We've got Air New Zealand paid out $12.41, Heartland Bank $68.74, Stride Property Group, ooh, the list goes on, $33.97. There's also another payment here. Oh no, hang on, that's the Stride. Maybe there's two payments there. I don't know what's going on with Stride there, but that's okay. What else we got? We got Contact, $66.11. Oh, gee, the list goes on, doesn't it? We've got some more Stride there because they seem to pay twice. They pay a larger amount and a little tiny amount. Property for Industry. We've got the $1,000 that we've put in down here on the 12th. That was probably the last time we did an update. Might have been even before that. And we probably covered off, yeah, we did cover off this $19.52 that we got in the previous video. So we covered off that, put in another $1,000. We've received some dividends. The portfolio is still cruising on upwards. Moving on to the app, so on the last trading day we actually lost $274.08. In fact, there was 11 gainers and 7 losers in terms of the market, which is unusual considering there's more gainers than losers, and we lost money. So that just means that the stocks that we lost money in they performed a lot poorer than the ones that we gained money in. And as an example here, we can see down here Tourism Holdings, which we've got, well, we don't have that much in this particular portfolio here, but that lost 3.77%, and some of the gainers, you know, they were pretty minute there. I mean, PGG Wrightson, we only got $551 in there, and even saying that, it's literally lost almost $300. That'll be the neighbour's dog ruining my video. Thank you. Anyway, so that's the way it goes. So some stocks up, some stocks down. We've pretty much lost $274 on that trading day. But that's not to worry, because the market is going to fluctuate, and the more money you've got in, the bigger the losses or the gains seem to be. And it's nothing you can control. You just got to ride with it, and it is what it is. So there we go, $71,480.73. That's the actual number that we're really going with, which essentially means we've lost $1,500. Well, yeah, even then the numbers are out slightly, because we got $1,546.51 here. I suspect that might be interest. I don't know. I'll have to do some calculations, rejig this application at some stage when I get some time, and make it as correct as possible. That would be the ultimate, so that way I can actually quote real numbers, including the fees, including the dividends, including the interest payments for the Shareholders, all of that sort of stuff. I don't know about the warrants. It'd be nice if they did match up to the cent, but we'll worry about that on another day. I think. That's what we'll do. So you can see down here, we've got some dividends coming up. We've got Briscoe's $34. We've got Barramundi $46. So there's some good numbers there. Some good solid numbers. Fonterra $72.63. Now, because we've got over $4,500 sitting in the Sharesy Save, this is going ex-dividend on the 27th. Today is the 24th. Oh, what does that mean? The 25th. We might be able to just squeeze in. Getting some money into that in the next couple of days. Maybe we'll just put $1,000 into that on the next business day and put the $3,000 into something else. I don't know. Have to talk to Denise, see what she thinks. Generally, it's probably going to be my suggestion that we'll go with anyway. If we go and have a look at the dividends, we've got $235 that's been paid out in March so far. We've still got another $364.43 to go, which is bringing it up closer to $600 for March, which is a pretty much $200 improvement on the March of the previous year. At this stage, we've got $202, which is still an improvement over April last year. So the amounts that we're getting paid out for each month over time, as we put more money into the portfolio, are basically growing month on month, as you can see. So we've had $372.67 paid out so far this year. Yeah, I mean, we'd be expecting, based on these numbers, we should be increasing this roughly by approximately $1,200 to $1,300 per year if we carry on with the same investment strategy. So we should be looking at roughly around $4,000 by the time we get to the end of the financial year. And by the time we do get to the end of the financial year, what are we up to? $71,000-ish. We're pretty much going to be at $100,000 at that point. So roll on 2025, this portfolio should be up to $100,000, regardless if it's episode 100, episode 102, episode 98. We should be at our goal, and we should have achieved our goal. And at that point, what are we going to do? Well, I don't know. Maybe we'll carry on investing into it. Maybe we'll just have a break from it and actually go and spend our money, because that's what it's for. It's not about just saving, and forever saving, and then one day you die and you've got lots of money in the bank that you never got to spend or you got to use. It's to be enjoyed. The reason for this saving is to become financially independent, so we don't have to rely on a job, so we've got more time, so we can do other things that we enjoy doing. That's pretty much it in a nutshell. Moving on to the share allocation, you can see here the wallet is starting to take a larger and larger chunk there with the $4,648 in the wallet. Now, I did notice something earlier, and it was the fact that we've got Fonterra Shareholders Fund. That's listed as Financial Services Asset Management, which technically is not correct. If we go back to... I'd have to go back and have another look, but actually that's a consumer defensive food something or other group, so it's potentially categorized incorrectly at this stage. So we'll go and fix that up. And you can see here it says Financial Services Asset Management, but if we actually go to the Fonterra's page on Yahoo Finance, we can see if we scroll down a little bit here, it actually says Consumer Defensive Packaged Foods. Milk products, right? Milk products. So they had some good earnings. They've increased their dividend from 10 cents last time apparently to 15 cents, which is a bonus, I think. Or even though this actually says they paid out 50 cents and then 40 cents for each share last time, which was amazing, and I couldn't believe it. I don't know if that was a one-off or maybe they'd sold something. I've got no idea what was going on there. But we are likely to invest in that. If we look at the analyst recommendations for this particular stock, it's undervalued at the moment, according to the analysts. Are the analysts correct? Yes, maybe yes, maybe no, I don't know. But anyway, it's $3.67. The analysts average recommend it should be worth $3.81. So that gives us a little bit of leeway there if the analysts are correct, of 14 cents per share. Moving on to the NZX50 charts, the week has been up, the fortnight has been up, so a bit of a lull there and a bit of a recovery as well. The month has definitely been up over the last calendar month, as it were, and the 6 months is on a upward trend again. We're just about reaching the peak amount that we have come to expect on the particular market, as it were. Well, will it go down? Will it carry on rising? I don't know. but I do know that we'll carry on investing regardless. And there we have it, so a bit of a mixed bag there. Glad we've got another episode out of the way. Over 71% of the way through, we are up to episode 73, so we're technically still down a little bit, $1,500 odd roughly. Yeah, well, it's just time to keep on trucking, keep on going. Another pay week coming up very shortly. We'll be putting another $1,000 in, and yeah, we'll carry on. Thanks for sticking around. We'll catch you in the next video. See you later.